If the president's tariffs will lead to higher prices, it wasn't really reflected in the latest inflation report. The government today said prices in July rose less than expected.
The housing market is facing a storm that nobody saw coming. Home prices are dropping everywhere. Mortgage defaults are on the rise. And people are asking one big question. Is this the beginning of a massive housing crash? But here's the shocking part. Some experts believe that even if interest rates dropped to zero, it still wouldn't be enough to stop what's coming. Why is this happening? What's causing so many cracks in a market that was supposed to be strong? Is it just high rates? Or is there something much deeper and more dangerous happening behind the scenes? Today, we're going to uncover all the details, break down the hidden factors that could crash the market, and explain what this means for you. Stay with us till the end because what we found might completely change the way you look at the housing market. And don't forget to subscribe because you don't want to miss what's coming next. The housing market. Something that once seemed unshakable is now standing on fragile ground. Across the country, prices are dropping at a pace that no one expected. Just a few months ago, experts were talking about stability, about resilience, about how this time things were different from the 2008 crash. But now, that confidence is disappearing, and fast. People are starting to ask the questions they hoped they'd never have to ask again. Are we heading for another housing collapse? And if we are, how bad will it be? This isn't just about a few homes losing value. This is bigger than that. Entire markets are starting to show cracks. And behind those cracks are stories of families struggling to make their mortgage payments, banks tightening their grip, and investors pulling back because the risk has become too high. The most alarming part? Some analysts are warning that even if interest rates fell all the way down to zero, it still wouldn't be enough to stop what's coming. And that's where the real mystery begins. If lowering rates can't save the market, then what exactly is happening here? What is so broken that even free money wouldn't fix it? To understand this, we need to look deeper than just surface numbers. For the past few years, the housing market was fueled by cheap money and aggressive buying. People were rushing to buy homes because interest rates were at historic lows, creating a wave of demand that drove prices sky high. Investors jumped in, corporations started buying up properties, and regular buyers were competing in bidding wars. Houses were selling within days, often for way above asking price. It felt unstoppable. But what goes up must come down, and now it's coming down hard. When interest rates began rising, the first cracks appeared. Suddenly, mortgages became more expensive. People who could afford a home at 3% interest could no longer handle 7%. That alone started cooling the market. Fewer buyers meant sellers had to lower their prices, and once that trend starts, it spreads like wildfire. But here's the twist. The problem isn't just higher rates. If it was, then cutting rates again could fix everything. But experts are saying that even if rates went back to zero, it wouldn't make the housing market healthy again. Why? Because the issue is much deeper than interest rates. The real problem lies in affordability and debt. For years, prices rose far beyond what average incomes could handle. People stretched themselves thin to buy homes, taking on massive mortgages that only made sense when rates were extremely low. Now, with economic uncertainty, layoffs and inflation eating into household budgets, those big mortgages are becoming impossible to maintain. Add to that the fact that many investors who bought properties in bulk are now trying to get out, flooding the market with homes for sale, and you have the perfect recipe for a crash. Even if rates dropped, how many people can really afford to buy when everything else in life, from groceries to gas, is getting more expensive? And then there's the psychology of the market. When buyers see prices falling, they wait. Nobody wants to catch a falling knife, so demand keeps shrinking and prices keep dropping. It becomes a vicious cycle. The fear spreads, confidence collapses, and suddenly, what was once the strongest market in the economy becomes its biggest weakness. This is how crashes start. Not overnight, but in a slow, painful slide that eventually turns into panic. Now, Imagine the ripple effects if this continues. Real estate isn't just about homes. It's tied to construction, banking, jobs, and even local government budgets that rely on property taxes. If housing collapses, it can drag the entire economy down with it, and that's why this is so serious. This isn't just a housing story, it's an economic story. It's about whether the foundation of financial stability is cracking right in front of us. So, is this the beginning of a housing crash that rivals 2008? Or is there a chance to stop it before it spirals out of control? Looking at everything we've just uncovered, it's clear that this is not just a normal slowdown. This is something deeper, something that could reshape the housing market completely. Prices are dropping, affordability is shattered, and even the usual fixes might not work this time. We could be standing at the edge of a housing collapse, one that doesn't just hurt homeowners, but shakes the entire economy. The big question now is, how bad will it get, and who will be hit the hardest? Only time will tell, but one thing is certain: what happens next will affect all of us. If you want to stay ahead and know the real truth behind these changes, make sure you hit that subscribe button, because this story is only just beginning.